Every January, the most powerful investors and policymakers in the world gather in Davos, Switzerland to tell us what's coming. And there's a famous Wall Street observation about that conference that's worth knowing about. Here's the thing about Davos. It's often considered a contrarian indicator, because large conferences like it tend to expose what's already embedded in market expectations rather than the surprises that actually lie ahead. This year, the dominant fear at Davos was the end of globalization. Tariffs, trade wars, geopolitical fragmentation. The consensus view was that the interconnected global economy was fracturing for good. That was the theme driving conversations across more than 40 private meetings and panels. But here's what the World Economic Forum's own analysis concluded after the dust settled. The fears about the end of globalization coming out of Davos 2026 look overstated, with analysts noting that de-risking, rather than full decoupling, remains the actual base case. In other words, the world isn't deglobalizing, it's just reorganizing. That's a meaningful distinction for investors. Full decoupling is catastrophic for multinational earnings, supply chains, and emerging market exposure. De-risking is manageable. It's slower, messier, but it's not the cliff edge the Davos crowd was worried about. There was also a strong sense at Davos that 2026 has to be the year that Europe delivers on ambitious reforms in security, energy, digital innovation, and finance. And if Europe follows through, it would be a genuine positive catalyst for European financials and growth. European stocks have been deeply out of favor with American investors for years. That might be worth a second look. The Davos Contrarian indicator has a pretty solid track record. When the smartest people in the room all agree on a risk, markets have usually already priced it in. The end of globalization trade may be one of those fears that's louder than the actual reality. Full World Economic Forum piece is linked in the description. It's a genuinely interesting read. Subscribe to Contrarian Capital. New videos several times a week.